I'd like to introduce the team. So first, just a little bit about the presentation today. So the presentation is called Give Me a Little Credit, and it's sponsored by Experian. And we have some really great colleagues that are here today to join me on this. So next slide, please. So the purpose of this presentation is really to help you better understand credit reporting, as Amanda was saying, demystify credit reporting, what that means, your credit score, and provide you with general information about how you can manage your credit reports so that you can get the credit that you want and need. But before we get to the presentation, I'd like to introduce the panel. So my name is Lisa Larson. I am a Vice President of Account Development and Customer Success in our Partner Solutions organization. And I'm joined today by Jennifer Tomei and Michelle Felice Steele. So Jennifer, would you like to introduce yourself?
Yeah. Hi, ladies. Yes, Jennifer Tomei. I am what you would consider an advocate for our partners. I am a client success manager in account development, and I also lead Women in Experian, which is an organization here in Texas. So I'm happy to be here, excited to be with you all. Thank you for having us.
All right, thanks, Jennifer. Michelle, how about you?
Hi, everyone. I'm honored to be here today. I am a VP of Product within our Consumer Services division. My products include Experian Boost, which you may have seen an advertisement about on TV. My team basically focuses on financial health and opportunities to help consumers improve their credit. So I work on the direct-to-consumer side of the business.
Yeah, and the Boost Experian Boost commercials are really hot right now. They're all over with NCAA, March Madness, everything. So really cool stuff there. So as Amanda said, a few logistics. So as we go through the presentation, if you think of any questions you'd like to ask the panel, feel free to pop those into chat and we'll answer those at the end of the presentation. Next slide, please. So just a little bit about Experian. So Experian is a world's leading global information services company, and we're there for life's big moments. So that could be from a consumer perspective, buying a home or a car, sending your child to college, or from a business perspective, growing businesses by connecting with your consumers. And we empower consumers and our clients to manage their data with confidence. And there's a lot of other information there, but the best way to find out more about Experian is to go visit it on our website, so www.experian.com, or you can go and take a look at our blog. So that information is out there if you want to go take a look at that. Next slide, please. All right, before we get started, I do have a little bit of a disclaimer about this presentation. So the purpose of this presentation is really to help you understand credit reporting and provide you with general information about how you can manage your credit report so you get the credit that you need and you want. But for legal reasons, we can't discuss anything that's specific to your personal credit report. We can't advise you about how to improve your personal credit report or credit scores. We're not going to be able to submit any sort of disputes on your behalf, which could, but we can't do that. And any information regarding Experian policies, processes is current. So whatever we're sharing right now is current as of the date of this presentation, but it could change in the future. So that's our little disclaimer that our lawyers make us say before we jump in. Next slide, please. All right, so let's talk a little bit about credit. Is credit a good thing or is it a bad thing? And well, it really can be both. Everyone wants the privilege of using credit, but that means that you have to maintain it in a positive manner. And what that means is that you pay your bills on time, you're responsible for your actions, you save for the items that you want to purchase, and you only buy them when you have the adequate funds to pay back the debt. Credit should never be used to spend more than you make. So the choice between good credit and bad credit is entirely up to you. So like most things, if you abuse the privilege, it's going to end up hurting you in the end. But if you learn to use credit wisely, you can enjoy the good life. So you can enjoy all the positive effects that come with it. When you use credit well, it's empowering. So learning good credit habits can build financial stability so you can be ready when the time comes, when you need credit to buy a car, get a credit card, rent an apartment, or buy a home. Next slide, please. So let's break it down. What is credit? Credit is obtaining goods or services and then paying for them at a later date under agreed upon terms. So that can be anything from a credit card, a mortgage, or a car loan. But there are additional sources of credit, such as service contracts. So when you get cable, you have a contract that's in place for your cable television. If you have a phone, a telephone, a cell phone, you've got a service contract that's in place for that. And additional sources are when you have your utility services. So that's your gas, your power, your electricity, all of that. And finally, your financial references. So that's kind of the overall scope of what is credit. Next slide, please. So the biggest mistake that people can make is to confuse credit with debt. Using credit cards does not mean that you should take on debt. So if you pay your balances in full, you get to use the bank's money for a month, you have the buyer protection, you have record of your spending, and you never pay a penny in finance charges. Doing this will ensure you have a credit history to work for you when you need it. If you use your card enough to justify the cost, it could also be smart to pay an annual fee for that credit card to earn rewards such as a cash back program or frequent flyer miles when we all get to fly again. So if you think of credit as a negative to be avoided, then you aren't living credit smart. The next slide, please. So there are 3 national credit reporting companies. These are Experian, that's us, Equifax, and TransUnion. So our national credit,
Can you try again?
I can hear he's talking to me. Our national credit reporting system enables instant credit, makes credit lower cost than anywhere else in the world, provides access to credit nationwide, and lets you purchase almost anything that you need using credit. The other advantage of that is that you can use your credit report as an account management tool to ensure that information is accurate and ensure that you're not a victim of credit fraud resulting in identity theft. A business can also choose to review credit reports from 1, 2, or all 3 of the credit bureaus. Consumers can also do the same. You can choose to request a report from each of the 3 bureaus. And we'll talk a little bit about that more at the end of how you can go get one of those free credit reports. Next slide, please. So let's talk a little bit about the credit cycle. So the basic credit reporting process begins when you open an account and make payments as agreed, or possibly miss some payments. Each month, creditors update their records and share your account status with the credit reporting companies. The credit reporting companies then update their records and add the current month to the history of how you've paid your account. If you don't want a credit report, then you can choose simply never to use credit. But once you do have an account, lenders have the right to share your payment history with other lenders and do so through the credit reporting process. Next slide, please. So we've got a picture of a library here, but credit reporting companies like Experian, we don't make judgments about the information in your credit report. So you can kind of think of this like a library. A library doesn't write the books, it collects them, stores them, and then checks them out. So if you think about it in that kind of analogy, what we do is we don't accrete the account history. We just store the information, the history reported by the creditors, and then we check that information out to other potential new creditors in a form of a credit report. So in order to check out a credit report, a company must meet the membership requirements of the credit reporting company, and must have a permissible purpose under federal law for getting that report. A couple of other things too is there are similar requirements around reporting on data. So they have to, you as a consumer can find out what information is being reported on your credit report, but the business has to have a permissible purpose about that as well. Next slide, please. Okay, so if you've been turned down for a credit, you most likely know about credit reports. That's because the company that denied your application was required to tell you how to get a copy of your credit report if they used to make a decision. And you probably remember that as a negative experience. But what about all the times your request was approved? The service was provided, you signed up for the merchandise, and you went home happy. So I'm going to turn this over. I started on Jennifer's part, so I'm going to turn this over to Jennifer and let her finish the information about defining credit reports and their importance. I was on a roll. Sorry, Jennifer, I jumped in.
I wasn't going to stop you. You're perfect. You're doing a very good job.
All right, take over.
Okay, hi, ladies. Yeah, so just defining your credit report and their importance, like Lisa said. If you've been turned down for credit, you most likely know about your credit report. That's because the company that denied your application was required to tell you all how to get a copy of your credit report if they used it in their decision. So you probably remember maybe it was a negative experience. But what about all of the times your request was approved? The service was provided. You signed for merchandise and you went home happy. Very likely a credit report made that happen. So this positive experience occurs millions of times each month. And in fact, in the vast majority of instances, applications are processed and approved with the credit report working to the advantage of the consumer. Next slide, please. So the information you provide in your credit applications is the first information that appears in a credit report. So you're responsible for the information that is used to establish your credit report and ensure that all of the identifying information is correct. So for that reason, it's really important that you always be thorough and consistent. And I can't stress that enough when completing a credit application. So whether online or in writing on paper, for example, you should always use your full and complete name and address. If you use ST for address versus street, continue that process. Doing so will really help ensure all the information in your credit report is matched accurately and completely. Also, if your handwriting is ineligible, similarly to mine, I write like a doctor, don't provide all of the requested information, or you can use variations of your legal name or address. Identifying information could really be reported incorrectly. So in that case of name variations, all of the variations you will use will appear in your credit report. So they aren't errors, they are an accurate representation of the information you provided to your lenders. Next slide, please. So Experian was the first credit reporting agency to include positive rent payment information in the credit report. More than 60 million US consumers have limited or no credit history at all. More than 110 million people rent their place of residence. So by reporting positive rent payment history, those with little or no credit report are able to build a positive credit history. With an established credit history, they may be able to then access traditional credit at a lower cost, helping break the cycle of debt and high cost sources of credit like payday loans, for example. Paying rent is much like paying credit accounts, and it's helpful in assessing lending risk, including positive Rent payment information in a person's credit report will help lenders identify individuals whose application should be approved when they lack traditional credit history. So in the past, negative information such as unfulfilled lease terms found their way into credit reports as collection accounts. So people responsibly making their rent payments on time were not really able to build a positive credit history, but now they can. Next slide, please. So these are some of the most common and harmful myths about credit reporting. So a credit report is a history. Consumers often pay a debt and then demands that we remove it entirely. The missed payments still are part of your history. Adverse action letters are required to tell consumers that the credit reporting company did not make the decision. If your name is on a joint account, it is your debt, no matter who received the goods. The term joint means you share full responsibility for that debt under the terms of the credit card contract, for example. For installment loans, the term cosigner means the same thing. Moving on to a divorce decree represents an an agreement between the separating spouses. It does not alter your obligations with creditors or override your original credit contract. As long as you're listed joint on an account, it will appear on your credit report. So if you do not wish to be responsible for a joint account going forward, you have to contact the creditor to request that that account be closed, or you can also request your name to be removed from that account. Written permission is required only for reports requested for employment purposes. In most cases, the application details indicate that by completing it, you are giving the lender permission to review your credit report. There are two types of inquiries on a credit report. Request viewed only by you refers to what we call a soft inquiry. And so soft inquiries such as requesting your own report or pre-approved offers. And because you are the only one who can see them, the inquiries in this section do not impact your credit score at all. So hard inquiries, on the other hand, are listed under requests shared by others, and they are the result of your application for credit and can have a small effect on lending decisions. So perhaps the most pervasive myth of all is that credit scores are part of a credit report, and they are not. So let's talk about more risk scores on the next slide, please. So credit scores are just an automated way of analyzing a report instead of conducting an individual manual review. So breaking that down, automated credit scoring still considers late payments, outstanding debt, your credit experience, inquiries, and other information from your credit history, but in a much more sophisticated, accurate, inexpensive, and unbiased way. So different models or formulas are used by different companies depending on the type of lending, kind of lender, or risk being measured. Credit reporting companies compile the credit report. The information from the report is then used to calculate credit scores. So in some cases, the credit reporting company may route the report through a credit scoring system as it's delivered to the lender. So in other instances, the lender may receive your credit report and then use the information to calculate scores. Next slide, please. So time is also really critical in having strong credit scores. Scoring systems not only consider a person's credit history at this moment, as discussed in the previous slide, but also the history over a period of time. So a pattern of good credit management over time is essential to having good credit scores. There's no real quick fix for poor credit scores, unfortunately, but by addressing the risk factors over a period of time and reestablishing a pattern of good credit management, scores will gradually improve. Improving credit scores is a process of rehabilitating the credit history. So with that, I'd like to pass the baton to Michelle. This is my favorite part of the presentation, who will be diving into how you can gain more control over your credit scores with Experian Boost.
Thanks, Jennifer. Hi, everyone. So with Experian Boost, this is the first product in market that really does give consumers direct control over their credit. Experian Boost is available through our Experian.com memberships, and it's available for free. So consumers would sign up for free at Experian.com to be able to access their credit report and all the great information that we just talked about. And you will also get a free version of your FICO 8 credit score. That's the score model that we display in the product. So once you go through and you sign up for the product, you'll have the opportunity to leverage Boost. And I'll talk about that a little bit more on the next slides. Go ahead and go to the next slide, please. So once you sign up, you're going to connect your accounts that you use to pay your bills. So traditionally, things like how you pay your utility bills, how you pay your cell phone bills, those things did not appear on your credit file. A typical line of credit is like your credit card or your mortgage or your auto loan. So what we did with Experian Boost was create a way that consumers could report the data for the bills that they were already paying, things like your cell phone, your water, your gas, utility payments. Just this last year, we added video streaming services as an alternative to cable, so that you can now get credit for your Netflix or your Hulu. So once you connect the accounts that you use to pay your bills, Experian Boost will basically be able to identify those payments and create what we call a new trade line on your credit file. And because we are Experian and we're one of the 3 national credit bureaus, we're able to add that directly to your credit file. And we have the ability to pull a new score for consumers immediately after that information has been added to your credit file. And we give consumers full control over the data. So once you add it, you're in full control over deleting it as well. So it's always available under your control. Let's go to the next slide, please. Okay, so this is basically the step-by-step process for Experian Boost. So first off, the consumer opts in to the value, to the product value. And then once you've consented, then you connect your bank account or your credit card account, depending on where you make payments for those bills. And then once you've connected your account, we basically access up to 24 months of your transactions in order to identify. We're looking for things for the transactions like your gas, water, electric, cell phone, video streaming services, those types of things that we can qualify as a new trade line on your credit file. We will scan for those transactions and identify those payments, and we'll group those payments together so that a new trade can be added to file. So you're given the opportunity to validate if we find like a T-Mobile bill or your gas bill, then you'll see that and you'll be able to say, yes, I want to add that to file. And then we can immediately pull a new score and you can see the results of your boost immediately. And this works again on your, that's okay, you can go to the next slide. It works, through the web application or through the mobile app or your mobile website. Not sure why that slide's doing that. Go ahead and go to the next slide, please. So this is, these are some of the metrics that we've seen with Boost. Now the product's been in market just over 2 years. And on average, we see consumers see about a 13-point increase. And that is enough to have you go to a new score tier. About 12% do increase their score tiers. So that's from going to like a poor credit tier to a fair credit tier. And that could really mean quite a big difference in how much you pay on a given loan when your score goes up to a new tier. Overall, around 62% of consumers who use Boost do see a score increase. And we have helped now, the slide is a little bit dated, so we're over 55 million points that have been added to consumers' credit file directly through using Boost. And we've had now almost over 14 million accounts that have been added to Boost. So consumers are seeing the benefit of that. When we built Boost, we determined that there's specific populations that would benefit, and we see that in the data as well. So consumers with poor credit, so those that have scores like in the 500 to 600 range, those consumers do see a larger overall score increase than say a consumer in the excellent or exceptional score range. So you can see the breakdown. About 88% of consumers with poor credit will see a score increase when they use Boost. Also, consumers that are considered a thin file. A thin file is someone who doesn't have a lot of credit history, or maybe you only have like 1 or 2 lines of credit on your credit file. What Experian Boost does also is it helps thicken your credit file, so you actually look better to lenders with a thicker file. So 86% of consumers with thin files will also increase their scores through Experian Boost. Let's go ahead and go to the next slide, please. So some of the benefits to Boost are, seeing an immediate improvement to your credit score. You go in and it takes literally less than 5 minutes to see the impact to your credit score. Consumers then can go from a thin file to a thick file. Again, that helps how lenders see you and evaluate you in a lending decision. It creates the opportunity for you to become better qualified and get access to new credit offers. By utilizing Boost, you can increase your score to the degree that you could move up to that next tier, which does qualify you for lower interest rates. And then adding new trades gives consumers the ability to become scored. We have a lot of consumers that come through that don't have enough information, don't have at least 6 months of history in order to become scored with the FICO model. So by leveraging Experian Boost, we allow consumers to become scoreable because we're adding more credit history to the credit file. I think that's my last slide, so I'm going to hand it back over to Lisa.
Hey, Michelle, quick question. So how can you download Experian Boost? So everything that you showed was a mobile phone. How do you download it?
Well, you can go to Experian.com on your mobile web browser, or you can go to the App Store on either iOS or Android and download the Experian app. And once you download that app or go to Experian.com, you can sign up for a free membership. And then once you are in the membership, you just go through a few steps to, like I showed in the product. So it's very easy.
And did you say that it was free?
I did say it was free, and it is free.
All right, okay, okay, all right, cool. Okay, so the last slide that we have before we take Q&A is just thinking about, can you get your own credit report? So yes, the answer is yes. You can get a free credit report from each of the 3 bureaus, available every 12 months. However, right now, throughout the pandemic, you have an ability to go get additional credit reports, and you can do that on a weekly basis through April 2021 by visiting annualcreditreport.com. But as Michelle said, by downloading Experian Boost, you could also get a credit report through that process. Is that right, Michelle?
That is correct. When you sign up for a free membership, you do get access to your Experian credit report. You have access to that every 30 days. And then through the membership, you also have ways to access your other bureau reports as well, but that's through paid. So to get copies of all 3 of your reports, you definitely want to go to annualcreditreport.com.
Great. Well, we're going to leave this slide up so that people can see how to get your credit report. You can either download Experian Boost and get the Experian credit report there, or you can go to annualcreditreport.com. So with that, that's the end of our presentation. So we really appreciate everybody joining us for this session. Thanks, Amanda, for organizing. And thanks to all my co-presenters. So this is the second time that we got to do this together, and I really enjoy having the opportunity to educate people about credit reporting. So thanks, everybody.